Good morning, Jags. This is Fahad. Today is Wednesday, September 9th. Let's get started. Three things I want to quickly cover this morning. Let's start off with semi sector. Expect a really nice bounce in the semi sector today. And there's a main reason for that, which is QRVO, symbol QRVO. I was quite surprised. The company came out with a surprise pre-announcement, and it was very, very nice last night. Now, interestingly, in the chat room yesterday, 2 hours before they put out this press release, I talked about that there was some short-term call buying that was picking up, and then the next one, a couple of hours later, the market closes, and Corvo said that they're raising their guidance for the current quarter, with both EPS and revenues estimates going materially higher. If you look at the pre-market action in Corvo, the stock closed at 114 yesterday and is trading near 121 in pre-market. Specifically, the company said that the Q2 revenues will be midpoint of 1.15 billion versus consensus was about 940 million. So that is about 7% beat or 7% above consensus. EPS was a material beat with midpoint around $2.14 versus consensus around $1.90. And so that's a 10% above expected. And the entire thing was the company said that this is based off of higher than expected, I quote, mobile demand for its advanced 4G and 5G products. Mobile demand for its advanced 4G and 5G products. Now, what does this mean for Corvo, and what is this exactly trying to tell us? There's a very interesting note out from Bank of America this morning, and which is why I think that the entire space is going to be hot and is going to run this morning. That note in the Bank of America talks about that there are two other companies that have very high exposure to the mobile segment that should see a significant strong move higher today. And these two companies have yet to provide guidance for the current quarter or provide any kind of pre-announcement. But I think Corvo, with very similar kind of dynamics, have put those things in motion. So in this particular comment, Bank of America says, while we remain encouraged by Corvo's overall strength as the 5G ramp accelerates, we believe RF vendors, specifically levered to Apple's 5G iPhone, which requires 2 to 3 times RF content versus mass tier, are likely to experience the most upside in the calendar year 2021, which is positive for Skyworks Solutions, which gets 50% of its sales from Apple, and Broadcom, symbol AVGO, which gets 20% of its sales from Apple. Broadcom is a much more diversified company. And they have yet to materially realize the full benefits of 5G content per unit growth, given their concentrated handset exposure, and so on and so on. Now, this is important because the 5G iPhone is going to be launched most likely on September 15th, which is next week. The company has scheduled this special event for that. We just found this out yesterday. And this, if the 5G iPhone is announced next week, according to the street, the RF content that's going into 5G versus previous phones is 2 to 3 times more than previously. Now, it's not exactly entirely clear whether Corvo actually took into account the higher content for RF chips ahead of this iPhone 5G release, in order to really increase their guidance that they did last night. Nevertheless, the two stocks that are also major beneficiary of this, particularly Skyworks Solution, they should pop sharply along with it. So if you've got Skyworks going higher, Broadcom going higher, Corvo going higher, I think this speaks for strength of the entire sector, and you should see semis actually start to see some bottoming price action today after an ugly breakdown from the trend support. And if it's, let's see, it may still take a couple of days of backing and filling before we have a nice build formation of the base, and then we can start to take another leg high from here. So other semis will also rally along with it, particularly Nvidia and AMD, both of which have come down sharply. So that was one thing I want to discuss real quick. The second update I have for you real quick is that where I'm looking for some buying opportunities is Visa and MasterCard. Now, I recently missed the run in both of these stocks because up until a couple weeks ago, or more like 2 months ago, I was talking about technical setups and breakouts all the time. And I was then trading those setups by trading short-term call options, and we were making recommendations the same way. Visa had a beautiful breakout a couple of weeks ago, similar to the rest of the market. There's a major VOP resistance at $200 level. And once it took out that level, it went straight to about 215, 217, and I missed this particular run. And then recently with the market volatility, this has come down sharply from 217 to back to 200, and it's up only $1 in pre-market at this time. And if you look at MasterCard has very similarly the same exact kind of a reaction. So you can see there's VOP resistance. In this case, a minor VOP support, I should say, around $328 per share. And the stock broke out through that from the bull flag and recently came down and it's retesting those supports and so on. Going back to Visa, for example, which I believe is a better looking chart, these stocks are continuing to provide update on how the trend is the quarter is trending, and they're coming out with very, very good information. For Visa, on September 1st, the company said that in August, total US payments volume rose by 7% year over year. The credit declined by 8% year over year, which is consistent with the July levels. Debit transaction grew by 24% year over year, which was, and then more importantly, which was partly elevated because the unemployment checks that everybody was getting. But more importantly, if you exclude the travel part from its debit transactions, then the total number of transactions actually grew by 30% year over year in the month of August. Even though the total number of times the card was presented at a physical terminal declined by 7%. Basically, when you parse this data internally, it continues to show two things. One, people are still hesitant to spend too much money on travel. It is improving, but very, very slowly. And number two, when the total number of terminals where the card was presented was still down 7% in August, yet excluding travel, the total number of transactions were still up 30% year over year. That's telling you that the card use continues to happen on widespread use throughout in e-commerce platforms. It's just e-commerce everywhere, tons and tons of online shopping. This is also a confirmation trend of, generally speaking, how e-commerce continues to benefit in this environment. MasterCard is out with a very similar update. This was also covered in today's first read, and MasterCard said that switch volume has continued to improve since the week ended August 28, partially offset by expiration of elevated unemployment benefits, which is exactly the same thing that Visa said. Switch volumes in transaction increased by 5% in the week ended August 28th versus 3% in the week July 21st. So that's a sequential improvement. Meanwhile, cross-border traffic was still down just because of travel restrictions mostly. So these stocks have pulled back to what was previously resistance and now support. So I'm looking for bounces. I think that Visa bounces from here, from 200 and goes back to at least 210. And MasterCard bounces from here and goes from 325 back to about 350. And so I'm expecting at least these charts to bounce back and make a lower high, if not a new all-time high. That's it from me. Jay?
Morning, Fahad. Taking a look at Myovant Sciences, ticker is MYOV. This is a biotech company focused on innovative treatments for women's health and prostate cancer. Its lead investigational drug candidate is called Relugolix, which is for the treatment of heavy menstrual bleeding, endometriosis-associated pain, and advanced prostate cancer. The company currently has 5 international phase 3 clinical trials, 2 of them in women with heavy menstrual bleeding, and those are called Liberty 1 and 2. 2 in women with endometriosis called Spirit 1 and 2, and then 1 in men with advanced prostate cancer called Hero. Now, the phase 3 Hero study is your next catalyst. And according to JP Morgan post earnings note, Leerink Catalyst database, Evercore deep dive. That catalyst will be playing out in Q3, so sometime this month. And Evercore had a note out last month where they did a deep dive into the drug for prostate cancer, and basically calling MYOV one of the most undervalued companies in biopharma. They also point out that this data is a heads you win, tails you win setup. So needless to say, I'm going to provide a much more detailed write-up on this company and its upcoming catalysts on the homepage either later today or tomorrow.
Sounds great. Looking forward to that article. This has a very nice, by the way, technical setup for a breakout. It doesn't really appear on my watch list as much. I don't think I've ever seen any kind of pickup in option activity in this one anytime recently. Clearly under the radar name, and so looking forward to what you discover in your research. I'll be most interested just purely looking at the chart, which is trying to tell me a story. I'm most interested what happened here in the first week of June. Must have been some clinical data that came out, and what is this telling us going forward about the pipeline and what the next catalyst should be to watch out. So looking forward to that article. Thank you. Chronicle.
Morning. Got some bullish checks on truckloads from KeyBank. So their proprietary spot rate index currently continued to show a steady sequential improvement last week. And on a year-over-year basis, dry van rates are now up 38%. Refrigerated rates are up 28%, and flatbed is up 21%. Pretty impressive. KeyBank is expecting these rates to remain elevated given that monthly imports continue to come in at mid-single digit growth, and retail inventories are also currently at their lowest in 20 years relative to sales. I think that's on the either the second or the third slide. But one thing to note here for the large truckload players is that they typically have annual contract agreements with their shippers, but at the same time, spot rates tend to be an accurate leading indicator of contract pricing as well as available capacity for these truckload companies. And so KeyBank is forecasting spot rates to be up mid to high double digits this year, and that's going to drive contract rate increases into next year. So we're talking about a 6 to 12 month horizon for all the players in this space, like JBHT, HTLD, and KNX and so on. So this is not an immediate trade idea, but it's certainly an area to look for buying opportunities once the volatility settles down.
What would be your favorite in this space, or have you looked at any of them that should be the biggest beneficiary of this pricing trends?
Out of all three, I like JBHT because of the U.S. exposure.
Yeah, U.S. exposure, and I've also often noticed that it is, and it has shown quite a bit of resilience even in downturn as a much better operator, a stronger management profile than some of the others. Rare cases of this thing ever blowing up upon earnings report. Just seems to have a much more consistency and handle on both up cycles and down cycles versus, let's say, Knight Swift, KNX, and some of the others that are out there, or YRCW, which is the yellow roadway and such. Interesting channel checks. Some very interesting charts here on this one. So for example, I was looking at this truckstop.com weekly market demand index. 2020 is just off the roof, just through the roof compared to in previous comparisons. And I wonder if this is also largely driven by the e-commerce trends. Most likely it is. But these has to be quite powerful positive trends for the trucking sector. This is also a great play from growth to continuous from growth to value rotation. All right, good stuff. Avo.
Morning, everyone. Looking at the QURE this morning. QURE is the ticker symbol. Yesterday there was a bull risk reversal placed in January. So they bought 1,000 January 50 calls and then opened a bull put spread in the 40-30 puts. Now this targets upcoming data at the end of the year in the fourth quarter. specifically in their Hope B hemophilia B phase 3 readout. And there's also a second readout coming out from another product that they're having trials on. There's also some data that is due in the first half of 2021, but I think this one doesn't target it. Additionally, there's the company's holding some virtual or participating in virtual conferences this morning, actually, in 3 of them. The Citi 15th Biopharma Conference, and then there's a Baird and Wells Fargo, a Baird one as well today. And then tomorrow there's a Wells Fargo Healthcare Conference. And then on the 14th to the 15th, there's a H.C. Wainwright Annual Global Investment Conference. I don't know if, it doesn't seem that they'll be presenting stuff during these conferences. At least I couldn't find any reference to that, but who knows, they might be just updating product information. I was reading a couple of analyst notes. They're not overly recent. A couple of them are just out of, or they were right after their earnings at the end of July. And they're bullish on the name, specifically the Hope B trials or the readout that's coming at the end of this year, the hemophilia B one, which has resulted in positive readouts up to now in any case. And they also look forward to the next trials, which should start at the end of the year and at the beginning of the next year as well. Now, there's a couple of things to note. You see there's a big gap down there in the chart. What happened there was they entered into an agreement with CSL Behring. So there was, and this was I think this went to investors because they were hoping to, I guess, not have this kind of thing because they might have had a more of a buyout opportunity, I suppose. But they entered into a licensing agreement with one of their products, and that's the reason for the drop. And that's it. I don't have anything else to add, but for reading through the information, it seems pretty positive.
Just to be clear, this was going to be my big questions as you were talking. This collapse in the stock back on June 25th, and stock is down, 40-50% from that point, was not due to pipeline updates or anything at all. It was entirely due to the licensing distribution deal that the company did, which naturally probably took down the estimates because they were probably able to raise cash, but in exchange of lower revenue profile in out years.
Yeah, they got, I think, 360 million cash, up to 1.2 billion in milestones, and I think 20% or so in future licensing or future revenue.
All right, just curious because the chart will give an impression that something went wrong in the pipeline, but it looks like that wasn't the case at all. For the readers who didn't catch it properly, just to be clear. So what happened yesterday? We saw somebody came in and they sold the January 30-40 bull put spread. So they bought the January 30 puts and they sold the January 40 puts. And they did that trade for about $2.75 net credit. Then they used partial of those proceeds to buy 1,000 of these straight January 50 call options. And they paid $6.60 offer for these when the bid and ask was $4 to $6.60. So pretty aggressive bullish bet, if you ask me, paying up the price. And so naturally a 3-leg structure with unlimited to the upside if this thing basically takes off. And so keep an eye on this one with all these presentations happening. Who knows, something could be in play with the clinical updates before the end of the year. All right, good stuff. Thank you everybody for joining. We'll see you in the chat room shortly.